Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 29th of September, 2020 at 5:55 p.m. Central Time. Well, I know what I'm doing. I'm going to have my dinner very shortly. Unusual for me. I try to eat dinner later, not earlier. I'm one of those crazy people. And I'm getting ready for the debate. That's going to be everything tonight. And then we'll see the world's reaction to it. It's going to have a monster viewership. The president, Trump, is going into it as the underdog at this time for a lot of reasons. That's the polls, whether he'll do well in the debate. A lot of people think he'll be great compared to Joe Biden, but Joe may surprise everybody. He's got a lot of experience. But the questions are going to be the key. How they answer them, how they resonate with people, the tone that these two take with each other. I think we'll all be watching it for all of these things. It's going to be great entertainment, great politics, and it's going to impact our lives. So we've got to pay attention to it. As for the metals, you had a nice rally today in them. You had a decline in the dollar index. You can see that. Most currencies went up against the dollar today. The stock market, I don't know that you can count that it's just a debate it's looking at. We are at month end and we are at quarter end for the stock indices. So when you get that, you get window dressing, balancing. There's a lot going on. In the energy markets, I think the market's very concerned again about the COVID impact as to what's going on. As European cases go up, as American cases keep going up, we have to wonder, what's the next outbreak going to do? And yes, there's going to be a worse outbreak. Why? Flu season's on us. What's COVID? What's the flu? We're all going to be asking ourselves. More tests. I hated today when I saw Disney. They announced today that they're letting off 28,000 people now. 67% will be the part-timers, but it's still a major amount of people. What's with the airlines right around the corner? What about restaurants as the weather changes? People as it is don't like going into spaces, so you take away the outdoor space. What's going to happen with that? There's a lot happening right in front of us. And the good news is another treatment for those that do have COVID came out today, and they say it is highly successful, but it's after you have it. So we still don't have a vaccine that helps us that way. As you take a look at the S&P, you can see that the market is still up for the week, 48 points, I guess, right now. But again, we're only going into the third trading session, and we have tonight to go through the debate, and who knows where it'll go. You want to have some fun? Watch the debate and have a screen open, because the algorithm traders are going to be at work on this, and you'll see what goes on as to how they play with it. Should be fairly entertaining. On the S&P 500 index, you can see that we've still been in that general downflow, and when you look at the market, you get a chance to see that you've got a lower low and a higher high. You've stepped out of a downtrend. That's the good news, but you haven't stepped into an uptrend. What you did get up to is what I call that line in the sand. So what the market did is it breaks itself down fairly hard. I've taught you, and you've seen it over the years that I've been doing this, that when a market gets over that band, eventually it falls back and fights a battle, typically at that 18-day average. We got up to it, and that's the battle you're fighting right now, looking for direction. What about Bollinger Bands? Well, you did ride that band. You hit it once here, missed it just, I think, right here again, if I'm correct. That low here was 31.98. 31.91 was the lower band, just missed it. And then it began its correction mode, stopping right where I thought it should, that 18-day average. And now I'm waiting to see what next, just like everybody else. And momentum, which had been oversold, it's no longer oversold. It's not overbought either. This market's waiting for whatever the next thing is going to be. In the NASDAQ, the trend is up. Unlike the S&P, you have higher lows, higher highs. You here, again, you are correcting an oversold condition. You can see the numbers were not staying under 20. You get to see that right through there. One more day, come on. There you go, didn't do it. And now you've had your pop in the market. And I wouldn't be surprised if you fall back here to the 18-day average. Unlike the other S&P, you've got your resistance right above you in the Bollinger top. Remember, in Bollinger Bands, generally the first challenge of a down band or an up band, if you come back to it, that's a resistance point. Doesn't mean you can't ride it, but that's your resistance point. In the Dow, You bounced away from the lower band right to that 18-day average. So, the regular viewers know I call that the line in the sand for a reason. You got to think of an imaginary fence. What makes moving averages so popular, and we know that they're a laggard indicator. They don't tell you what's going to happen in the future because they're based on past data. Some use exponential, smoothing moving averages, but I've tried everything to say, can they project forward? I haven't found anything I'm comfortable with. What I did find, though, is that so many people watch them. The fact that so many watch them, like to watch Bollinger Bands, you get prophecies that start to come true. And what I call that the line in the sand, it's because after a big move to the upside or downside, markets come home to roost against that number often and then figures out what the next move is going to be. Russell, the same thing. As this market got down right into here, what was I saying? I said, I think the smart money doesn't want to be short against this. That's the 200-day average, the 100, the lower Bollinger Band. Well, after the fact, that looked pretty darn good because here you are at that 18-day average, and now the market's without a trend trying to figure out what is the next play. We may get an indication of that with all the data this week, and of course, tonight's debate, going to be very important. In the VIX cash, you know that I've moved back to the VIX that you're all comfortable with. That's why these numbers are now in the 26 area versus the 20 area, which was the shorter term VIX. But lower highs, lower low, downtrend, resistance right through here, the 100-day in green, the 18, and an oversold market. The bears have control of it, which is friendly to the stock market, but they're not going to press it, in my opinion at least, when you're in an oversold area. T-bonds came alive today. The market's overbought. It's at the resistance point it keeps failing at, which is this 100-day average, and it keeps finding support at the 18, a very difficult market. And the market, for me, hasn't really determined. I am not convinced this arrow that I put here is the right place. I see it much better now in the 10-year. It straightened itself out. This was also an outside day down. I want to show you something. When you take out the high of an outside day down within 2 days, my rule of thumb, it's not on a tablet anywhere, it's my rule of thumb, is it means until you get back through that low, the odds favor the market's going to make a run at the closest moving average above it, none are there, or the Bollinger Band. Tell me what's going on. I mean, I'm pretty satisfied with what I said. In the dollar index, you've lost the embedded reading. Unless it gets it back immediately when we reopen and get through this debate tonight, I think the odds favor you're going to make a run at the 18-day average of closes. So to get it back, you've got to come back up and get a strong move going to the upside. I don't think it's going to happen. The euro lost its bearish embedded reading. And here's a market that I thought was a short sale on this rally early on this morning. Not right. What do you do when that happens? Skedaddle. It's simple. If you think you can win every trade, you can't. But if you're going to be wrong for 30 points, 50 points, whatever it is, a normal amount, not hundreds of points where you're getting yourself stepped on. Your mind stays fresh. You're playing other trades immediately. That's what trading's about. That's why it's called trading. In the Japanese yen, there's resistance now at the 18-day average of closes. The market got down low enough to have a downtrend. Lower highs, lower lows, momentum down, but I'm very nervous. Being short on an oversold condition, not my cup of tea. I see resistance 94.88 and a half. You don't want to get over 95.08. That'll just negate this whole pattern. In Bitcoin, the October contract, you still have a pattern of lower highs, but I'm going to be frank with you. I don't know where the lows are. I can see two lower highs, and I guess I can argue a lower low. So I'll say the swing line is down with today's confirmation of the action. At the same time, you're trading over the 18-day average, which means the bias is up. The filter on a swing line is where the bias in the market is. That's one of the steps I teach in my charting course. I only use 5 different indicators. I found that if you start using a slow stochastic and an MACD and an RSI, They all fight each other. What are you trying to accomplish? I want to get things that, as I learned over the years, do better for me than hurt me. I used to be an RSI student. Then I swung gears. I used MACD. Then I swung gears again, and I'm now sworn in on the slow stochastics. I think they're a better indicator. That's my own impression of them, and I've used them all for many, many years. But I see neutrality right there. Brent, you've got to now move Brent versus WTI December contracts for both and where you're at. Tomorrow's the last trading day of the November Brent contract. You're in September and November's going off the board. Whoever thought this up is crazy. In the December Brent crude oil, you can see how the market has got lower highs, lower lows, the momentum pointing down. The resistance, I think, is fairly clear now. It's the 18 to the 100-day average. I think the bears are present in the market, pursuing this market on the downside. And we'll have to see just what happens through here. Now, let me tell you something else that happened. This was an outside day up. And that was yesterday. Today you took out that low. You know my thoughts. When that happens, you're going to, in my opinion, doesn't mean I'm right again, you're going to the closest of a moving average, they're above you, or the Bollinger Band. So that's my target. I'm wrong if you get back over the highs of that day, which would be yesterday's high. In the November WTI, we have a different pattern, a higher high, lower low, but you have a bearish crossover. Always got to keep your eyes open when you're looking at charting. And take a look. Here's the, underneath the market, the 100-day. Here is the 18. And all of a sudden today, what do you get? With tonight's trade, look where you finished right on the close, still hadn't done it. With tonight's trade for Wednesday, you're getting a bearish crossover. A lot of resistance, but that's a bearish market set up for the moving average traders, and you've got to understand how they trade. Gasoline, I think it missed hitting the Bollinger Band period. I think the momentum is now going to work against it for a bit here if the products are coming down. The API numbers that came out tonight, they were a net draw. So it'll be interesting when we see the EIA numbers in the morning, but the COVID cases seem to have traders' mentality at work here. And each time they see surge numbers or other things happening, they're saying, well, how can we get demand out of that if people aren't going to do X, Y, and Z? And that becomes the problem. So we'll see. Today, you saw the Disney firing, not furloughing, firing 28,000 people now. That is because of their parks, their entertainment, what's going on. People just aren't going to big venue areas. So you can say, hey, the movie theaters are open and they're doing fine. Are they? They're not. They're running at 25% capacity. That's not good. I owned a movie theater, so I can tell you the math of movie theaters. And you're not going to stay around very long with those numbers. You got real problems here. And as you look at it, the market's slipping back, but it's still in a bullish trend until you take out that low. And in the nat gas, what goes up must come down. Wow. Remember I said I didn't understand what was going up here? It had to be some type of play off the oct gas as it was going off the board. I think that's what we've discovered. When you go this much up from 337 and drop 30 cents immediately, there was more going on this chart than that. You know, one of the things that I love to do is teach, and one of the things I hope you like to do is learn. And with that in mind, we have our futures trading kit. Now, I'm going to stop it here because I want you to see what you get inside the kit. We're talking all these different chapters, and that is the key to it. You get two different versions of our charting software. One is for those of you that like to have an online version. Others get the other parts of it. You're going to see the different booklets you get. We work with the exchanges. You're going to see their brochures, the different chart patterns. You've got to learn technical analysis. I love technical analysis, but fundamentals are important. So you've got to have them. Our newsletters touch on all this all day long. We don't write a newsletter a day. We are talking the Linn Group, the Linn Associates that I'm with. We used to be the Linn Group, now we're Linn Associates. I don't know if we're putting out 50 to 70 a day. It's a big number. And it's because we're covering so many markets. We've got the pros covering them, news reports, specials, all that. Cause and effect. I stopped here for a reason. Do you even know what money supply is and the velocity of it, the M1, M2, and M3? If you don't think that you should know, get ready for something brand new. It's already in Europe. That's what people are talking about. It's coming back to America because as the Fed is committed to these low rates, now the question is how does the money move through the society? And money will move before the inflation moves. You get to see what's going on. So these are things you want to learn about. You want to learn about if the Fed makes a change to its philosophy. What does that mean? And it's all explained here. And I mean in great detail, but in a way, if you know anything about me, I don't like to spend a lot of time writing. I don't want to spend a lot of time reading a lengthy article. I want to get right to the meat of what I do. My time is important, so we put that together. The CME group, this is all their educational brochures, and they keep adding them. So we've got our links in there with their exams if you want to take them to learn more and more. How do you get this? It's free. And when we get it to you, you're going to get a link. You're going to open it up on your computer. It's going to open everything you want. You don't like it, you're going to hit a delete, and it's all gone. You can print out everything there. You can review it. We will set you up if you want the charting software with that. If you want a couple of weeks of our market information, if you don't have a trading account with us, all you need to do is let us know. Go to our website under free offers. Take advantage of it. You're going to want it as we're approaching the election. What's the impact on grains, metals, stock market, all these other markets going to be if we get transitions, or if it stays as it is, what's the new thing's going to happen? I'm Ira Epstein. You have a great night.